SoFi stock is up 25% in the past 5 trading days. It's up 7% in the past 2 trading days alone. We tried to break through that $10 psychological level today. Didn't quite work out. I still think that we're going to break through over the next couple of days. And there's a couple of key data points that I've been seeing out there that suggest that this run can keep going into the next week. So in this video, I'm going to be sharing what I'm seeing and why this SoFi run can keep going until the end of the year. Okay, so in this video, it's going to be more unstructured because I just want to share some thoughts as to what I'm seeing in the market out there. Simply put, this is not a good position for short sellers to be in with regards to this stock picking up steam from a momentum perspective. We tested the $10 mark twice today. We ended the day at $9.94, near the high of day. $10 is a big psychological level. We're breaking into double digits. We've only done that one time previously in the summer. And once we break through, there's little resistance points up until $14 from a technical perspective that we can see. So the run can definitely continue after we break through those major psychological walls. Now, the simple reason as to why the rally can continue even further is all going to be fueled by short sellers, because the fact of the matter is that SoFi is seeing an all-time high for 2023 with regards to short interest, right? We reported on this last week that the short interest is around 140 million shares plus sold short. That's about 16% short interest on the stock. I don't think that this short interest is really dying down given the run that we've been having. Danny Dios posted this yesterday. The net borrowing is 7.5 million, half of the volume out there. Simply put, shorts are not selling their position. They are not covering. And we know that with the prices that SoFi is trading at, that most of these short sellers, the people betting against the company, they're underwater on their positions, right? The stock is trapping them into their positions, and those short sellers will be faced with some tough decisions down the line. Keep in mind that the entire market right now is increasing with strong momentum because money is flowing back into equities from treasuries, from high interest savings account. Basically, as a result of the FOMC meeting, the Fed opened the floodgates to say that 2024 they're going to have rate cuts and that the market is going to see a tailwind as a result of that. And so people are trying to front run that because they see more returns in equities versus treasuries where they were sitting at, or money market funds where they were sitting at. And so one thing to look at is look at other comparable companies, right? Look at Block, the move that Block has made. Look at Affirm, look at Robinhood, right? A lot of this money is flowing into small caps and mid caps. I actually saw this post from Jesse the other day around small caps having more room to run, basically saying that the Russell 2000 as an index as a whole has lagged the S&P 500 and has super lagged all of the mega cap stocks for a long time, and that there's a lot of room to the upside, right? Because when you look at the mega cap stocks, a lot of them are all-time highs, and then you have to ask yourself, what is the potential return that I can get there given the year that we've had? 2023 has been pretty good for mega caps versus small caps that, yeah, a couple of them might be rising 200, 300% like the likes of Coinbase or Affirm out there. SoFi even is up 120% plus. But if you zoom out from a 2-year perspective, we're still down from 2021 levels, right? SoFi was trading in the $20 range back at that time. And so even though we're up from $4, it seems as though 2023 has been a huge year where the stock is up more than double. Keep in mind that a lot of the investors that are in SoFi are underwater because they were buying it in the teens, and maybe they're averaging down. For myself, for example, I averaged down significantly. There's still a lot of room to run. And as a result of that, a lot of the money that's flowing into the equity market is flowing into small and mid cap stocks. Now, here's the simple reason why the stock can still run with these shorts. I made a post about this last night. With 16% short interest on SoFi, the people betting against the company are basically forced into 2 simple paths. Okay, number 1, they can cover their position. And if they cover their position, they have to buy back that stock. It can drive the stock price higher, leading to a short squeeze situation. Or number 2, they can double down on their position and add to their short and average up, essentially further increasing that short interest in the stock and further adding more fuel to that potential fire later on down the line if the stock does not fall back down. And simply put, I don't think that the stock is going to fall back down to the 6s or the 7s because of the catalyst that we have around the corner, right? We have Q4 profitability. The company is going to be guiding to be sustainably profitable in 2024. They're going to be releasing guidance that highlights that financial services, that highlights technology platform is going to be a higher percentage of the revenue mix, that the margins for technology platform are going to be coming back. All of these bullish sentiments that break down the bear cases, and essentially it's going to be very, very difficult from a fundamental perspective to push this company back down, because the last bear case remaining has been that SoFi is unprofitable, and as of Q4 that will no longer be the case on a forward-looking basis. What's happening now is that all of these short sellers have trapped themselves, have backed themselves into a corner, and there's really no easy way out, because if they double down, they're betting that the stock is going to fall back down so that they can get out of their position unscathed or with minimal losses. But they're also doubling down, and if the stock keeps going up based on the fundamental reasons, they're going to be in more pain, and it could lead to an even bigger short squeeze down the line. Now, the interesting piece here is that all of this growth has been based on momentum. Today, we received news that Jeremy Rischel, the CTO of SoFi, sold stock, and I'm going to be covering this in my end of week recap in more depth. But my point is that the stock still closed near the high of day at $9.94. A few weeks ago, we had executives selling stock, and it was like big deal, right? It was like the end of the world. Oh my gosh, the chief risk officer sold stock. Lauren Stafford Webb sold stock. Jeremy Rischel sold stock. And today, SoFi stock just brushed off the CTO sell. The stock closed out strong. The momentum is there in a way that wasn't there a couple weeks ago. And the short sellers are simply running out of room when it comes to shorting the stock, forced into one of those two alternatives. I'm not saying it's guaranteed we're going to see a short squeeze. I'm not saying it's guaranteed that SoFi is going to go to $12 or $13 or $14, but it's on the table. It's definitely on the table. And it feels as though the tides are shifting for SoFi. I'm seeing more people talk about it on FinTwit. I'm seeing more people get excited about it. Remember that this was a company that had a bad reputation of surging up and then giving back all of those gains the same day or the same week. And all of that surge was based on terrific news. And now the tides are shifting where we're surging up on no news at all, on just momentum alone, and it's not giving up the gains. It's been 2 weeks now, and the company has been steadily inching higher and higher. And so the thought that came to my mind was shorts are already trapped in their position based on just the momentum. Imagine if the company also released some fantastic news with regards to Galileo, or with regards to a partnership, or even something as simple as the CEO buying more stock. I made a little post on X to say, it would be a real shame if the CEO is buying stock way up here because he was buying stock in the fours, which saved the stock in December of 2022. This is actually the anniversary of Anthony Noto buying 500,000 shares of SoFi on the open market at $4.59, where he basically nailed the bottom. And what that did at that time last December is it reinvigorated a lot of the longs to stay strong in SoFi stock and to continue adding to SoFi stock, because if the CEO is putting up a bunch of his own money in this company, buying it on the open market, then that really added more fuel to that bull case. And so if the CEO comes out again and says, hey, I know I bought at $4.50, but I'm also buying it at $10 because that's how bullish I am on the company, then that's going to motivate a ton of people to keep adding into the stock, further pushing the shorts to the edge of the cliff, because they're running out of room with Q4 around the corner. On a fundamental basis, it's just so much of a locked certainty that the stock is going to form a new base. It might not be at $10, it might be at $10, but it's going to be higher than what it was before. And these shorts are further and further and further going to be underwater because the time is ticking given all of this momentum. Now, one thing that I am looking forward to is I'm looking forward to the NASDAQ short report that's going to come out probably around the 26th or the 27th of December, which will highlight what the short interest is as of mid-December. But right now, from everything that we're seeing, it does not seem like we're seeing any covering. It seems like the shorts are digging their heels in and are further betting that this company is going to fade back down. I just simply don't think that that's the case because of the momentum. I could be wrong. Simply put, it's an option on the table, and it's a very lucrative option for bulls. So we'll see where the end of the week takes us. We'll see where next week takes us, but it's something to keep in the back of your mind as you take a look at this price action, because it can get really volatile really quick. And generally speaking, I mean, SoFi has been known to run leading up to an earnings report, and this is the most anticipated earnings of the year. So that's all I'll say. We'll see what happens. For right now, this is the Fundamentals Investing Podcast. If you want consistent daily SoFi news, follow my channel on X, follow this YouTube channel if you're watching on YouTube, and subscribe for more information.